Well, copper trading near multi-year lows. Hello, everybody. I'm Mike Norman. Welcome to Hard Assets Investor, and we will be talking about copper with my guest today, Eric Zuccarelli, who's an independent trader here on the floor of the CME Group in New York. Eric, thanks very much for coming by.
Good morning. How are you?
So I'm fine. So we're not far from really multi-year lows in copper. Copper, people look at that as a very sensitive economic commodity. Is it necessarily telling us anything about the state of the economy, the global economy? I mean, we do see pretty decent numbers coming out of the U.S., weakness, albeit in Europe, and some softening in China. But is there any kind of economic message, do you think, coming out of the copper market?
Copper has definitely taken a backseat to some of the other major commodities recently, and it gets thrown in a basket of overall commodity algorithms. We definitely seen a sell-off of late, attributed certainly on the back of crude oil and the gold markets, which have made significant new lows for the year, and multi-year lows, numbers we haven't seen in quite some time, whereas copper has hovered around the $3 mark.
Right, which is, and if you look at anything historical, that's still very significantly higher from, years ago when you're looking at under $1 a pound, correct?
Well, the cost curve for copper certainly has increased over the last decade or so, but even that cost curve is maybe $1.50 to $2. So to have such a premium in the price, even after 3 to 5 years of $3 copper, is rather significant, and not anything like oversupplied crude oil or a out of favor gold.
Now, one thing I've noticed when looking at the price structure of the market is in backwardation, meaning that the front month, the spot, is trading above the deferred contracts. And I guess that would speak to your comment that you just made that, despite the sell-off, the pullback in prices, wouldn't that backwardation be an indication of some tightness in the physical market?
The physical market has been dominated by one particular player in LME. That rumored to be a concern called Red Kite. They have been various numbers thrown around. Between 60 and 80% of the LME warehouses is owned by this one particular concern.
Is that a speculative position? Is that the trade?
Certainly could be a speculative position, and with the recent sell-off, you've increased open interest significantly and added a lot of shorts to the market, betting on the market going lower. As they have to get out of their active month positions and roll their futures forward, it creates a significant backwardation because they have to buy first and then sell later, which puts the squeeze on for the shorts and letting the dominant long take advantage of that.
How tenacious are these shorts? I mean, we've seen other instances of market manipulation, for lack of a better term, attempted short squeezes, but from time to time, the short sellers win out.
Unfortunately, at copper, I've taken a long time looking at this, and nobody makes money at copper. The hedge funds.
Hopefully you do.
I do all right. The hedge funds notoriously are buying high and selling low, and after getting the price to between 315 and 320 during the summer, and getting long, they puke them out, and in such selling create a technical picture in which looks terrible, and then the funds pile in all on the technical downside picture, and now they're all short. So if increasing that open interest again at the lows, unless something significant happens, I'm sure they'll have to cover up again and lose money.
I've always said that. I've always thought that a very good, very simple trading strategy would be to fade the leveraged money, because it's exactly as you say. And if you look at patterns in open interest, I mean, they're buying at the top, they're selling at the bottom, which is exactly the kind of behavior that leads to ruin, or at least a massive loss of money. You should be doing the opposite. But having said that, it requires patience. I mean, we could see, and I'm sure you've seen, I've definitely seen markets move far beyond the point justified by the fundamentals. I mean, as a tactician, as a trader, how do you deal with that when let's say fundamentally or even technically something is overbought or oversold? How do you work on that timing or holding a position until it turns?
Well, me personally, I'm much more of a day trader, so the day trading technical analysis that I use would not necessarily be good for a longer term trader. Even today, we've had a significant spike down below $3. We have regained that significantly. I think we could put maybe even a spike capitulation moment for the copper in today for the temporary bottom, actually. But on an overall, I think to watch those things like open interest increasing significantly. I'm talking 30 to 50,000 in copper, which is pretty much ranges between 130, 140 on the downside, 185 on the upside, and now we're pushing that upper limit in which they get all in again.
Let me ask you, because we've just had the midterm elections, a landslide for the Republicans. Probably we're looking at some major policy shifts. Has there been any talk in the market about the potential impact of this? Do you have a view on, let's say, the economic landscape now following the Republican win and the takeover of the Senate?
Certainly one of the things that becomes interesting with the Republicans winning would be the strength of the dollar. Certainly the Fed announcement that they have completely finished their bond purchasing program, and the thought that 2015, whether it's first quarter or fourth quarter, that interest rates will be rising has put the death knell into gold, certainly added to crude oil's demise, and copper, its sell-off at this point. But the supply-demand picture for copper does seem to be a little bit better than those other commodities, and copper being apolitical will do its own thing.
That's a good point that you made, because with the very strong rally in the dollar that we've seen since the early summer, it would seem like copper's been a little bit more resilient than some of the other metals. Wouldn't you say that?
Well, certainly the volatility in those other commodities has been enjoyable to trade as a day trader, but copper has been the resilient one to the downside and not pretty much followed on those short cover rallies either. So even when we've had that significant sell-off in the S&Ps, copper only approached the lows. Now we've had a monster rally back in the equities, and copper really did not enjoy that rally either. So if anything, copper has seen a lack of volatility and has not really followed when it should be.
I want to get back to that backwardation again. Has that been coming in? I mean, is it narrowing, or has it held steady or even widened?
We are experiencing a bit of a rollover period in which, beginning to end of November, you have a situation where positions must be gotten out of because December prompt is now the active month. So you will see some funky things happening in the spread for COMEX. In London, they continuously trade at 3 months from today's date. The backwardation is dominant in London, so in terms of that, they have attained a level between $60 and $80 per ton and pretty much stayed at that level the past couple of weeks.
As a floor trader, what are some of the things that you key off of? I mean, do you look at the stock market? Do you look at the S&Ps? You mentioned the dollar, or maybe some of the other commodity markets?
I have my own kind of technical indicators that you use for specific day trading activity, and that's kind of proprietary secret stuff.
All right, I won't ask you to divulge those. I'm sure that some of the other day traders are probably looking at your standard S&Ps, your economic numbers that are released on a daily basis. So what would you say the outlook is for the next 6 months?
For the temporary time being, there has seemed to be a deficit in copper, where a lot of people had expected more supply to be coming on stream this year. I think that has caught people wrong-footed, and that's why we have a backwardation, because those shorts are wrong-footed. That eventual supply, whether it's in Indonesia, which has finally settled their issues, or Mongolia, which has a significant, world-class supply coming on, and even Africa has significantly increased their production. And even if the United States, which has seen good numbers and the economy doing well, that isn't going to be enough to sop up all of that extra supply, and that demand isn't going to be there. So I would think we could see lower numbers next year.
All right, so not good news for that one long over there in London, I think, right?
Well, the long has
Not that we have to worry about that guy.
The long seems to be much more control of premium, and if he has outside positions in which he's selling that premium to physical traders that actually need the dominant long is always hedged with his sales, and he's trying to squeeze the premium out of it, so he'll do all right too.
Very good. Eric, always a pleasure. Thanks very much for coming on the show.
Nice to have you.
That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.